Welcome to this week's Treasury Career Corner podcast, where I interview Treasury professionals about their Treasury careers. Each and every week, I'll talk to treasurers about how they built their careers, where they are now, where they see both themselves and the Treasury profession going to next. Let's get on with the show. This week's show, delighted to be joined by Declan Ware, the Group Treasurer at EMR, European Metal Recycling Group. EMR is a global leader in sustainable materials with physical operations in the UK, US, Germany and Netherlands. In the US, it's got 54 sites, right the way from Texas, where I'll be in a few weeks' time, to New Jersey, where I'll be week after next. Core business in recycling of metal and plastics from a range of public, commercial and industrial waste streams, end-of-life vehicles, consumer products, industry, all sources of recycling. EMR's generate around 10 million tonnes of sustainable metals and plastics, saving over 10 million tonnes of CO2 compared to virgin alternatives. Great intro there. But Declan, we're going to go right the way back, beginning of your career, if you would. How did you first get started in finance and then Treasury? Over to you, sir.
Thank you, Mike. That was a great introduction to the company. You should write our presentations. So where it all began, I graduated with a degree in economics at the University of Manchester and was fortunate to get a place on the graduate recruitment scheme at the then British Nuclear Fuels based in Warrington. And that presented a great opportunity to spend 2 years initially within the group finance function, almost on a rotational basis. So I spent some time with the financial accountants, the management accountants, tax, and I also spent some time up at Sellafield in the operational finance side of things. So real good exposure to the business. At the time, the political agenda didn't want nuclear on the UK power source. There was also a significant amount of historical liabilities that needed to be managed. So the business, BNFL, in its current form, was being wound up. I was then asked to, when my graduate trainee scheme came to an end, join part of the financial accounts team that were going to be leading that. And at the time, there wasn't a defined treasurer's role. So it was great for me because my time had come to an end and I was able to get involved in the treasury side of this reorganization of the sector. So that was everything from operational banking, setting up bank accounts to mirror the new site license structure that was going to be applied, the management of the investment portfolio to match the liabilities. I took over that, which was a crash course in the likes of bonds and gilts and fixed income. And perhaps most excitingly was the disposal of Westinghouse Electric, which was almost the jewel in the crown of BNFL at the time. And that entity was sold to Toshiba for north of $5 billion. And not me directly, but me in consultation with the FD were responsible for putting in place hedging instruments to mitigate any adverse movements in the exchange rate from the time the sale was agreed through to completion.
I just want to jump in there.
Pressure that.
Well, let me jump in, Declan. You've come in. What first sparked your interest in Treasury per se? Or you didn't know what Treasury was and they're just saying this? Because these were early days. It's when I first started my Treasury recruitment career, people were like, what's Treasury? I went, I don't know. I'll find out from these Treasury guys.
Treasury to me at the time was, certainly early days, was someone who looked after the money at the football club. You went and played football on a Saturday and you had a treasurer who made sure you paid your subs and they paid the league fees when you got a yellow card. That was Treasury for me. When I was doing the initial stage of the graduate scheme, I was also studying CIMA. So whilst that is predominantly management accounting qualification, it does lend more into financial management and indeed Treasury. So I learnt about it theoretically. And also the UK treasurer for Westinghouse, who I've just referred to, also sat in the UK office. So I spent quite a lot of time with him. He educated me. I was like, well, this sounds quite interesting here. Yeah. It's pretty dynamic. You're learning more about the business because every action that the business takes typically has a treasury impact as well.
Yeah. And then, as you said, you'd gone from that intro to treasury and then it gone right up to disposal and the billions and things like that. What was the challenges for you at that early stage, if you like, and how did that shape you then as a treasury professional?
I think it required a significant amount of self-learning. Yes, at the time, as with many treasury functions, I found that the accountant would do the FX, the tax might look after the banking relationship. There wasn't really one defined contact for Treasury. So having that motivation and discipline to go out and rote learn the information from a theoretical standpoint. So when it comes to the practical side, I'm well versed, but also leaning on relationships, speaking with our operational bankers, speaking with some of the fund managers and just being honest, don't try and blag it. Don't say, oh yeah, I can do this. Be open-minded and admit when you don't know something. And they were always very open and helpful in terms of getting the experience and knowledge that I needed in order to perform the role effectively.
You did that role, so you got graduate, group treasury manager, and then you went to EY. What was the next move, or how did it come about?
Yeah. So the reorganization of BNFL inevitably meant the group finance function in its current form would be diminished. So over a stage period, people would leave. We were all given notice, and within that notice period, we were given the opportunity to perform any qualifications that we wanted to. So I did my associate ACT examinations. I knew that I was going to be leaving in the December, and I guess my head at that time was, right, I need to get another job. I can't have a time where I've not got a job. So I guess through my studies with the ACT, got to know the guys on the course, one of which worked in infrastructure advisory for EY. I'm getting my big four mixed up there. Really interesting. It was in the infrastructure advisory team. It lent to Treasury. The fact that he was on this course meant that, okay, this sounds interesting. Let's give it a whirl. I've gone from a corporate Treasury function into practice. I've never done practice before. What have I got to lose?
Give it a go.
So did the interview ahead of my finish date in December, got offered the role, and I was thinking, great, I've got a month or so off now. Went and did a bit of traveling, and back in my mind, that I had a role to come back to. Started there at the beginning of 2018. And my time in practice, I enjoyed. I threw myself into it. Really supportive bunch. It took a bit of getting used to in terms of the whole concept of doing your timesheets, and obviously a very structured management and organizational frontage. But I was there for just shy of 8 months, 9 months in the end. And I guess it was a bit of a crossroads for me because I'd been doing pure treasury for 2.5 years at the back end of my role at BNFL. I knew in my heart of hearts that I wanted to continue that. Perhaps naively at my age, I thought, well, if I want to continue treasury, I'll have to move to London. I wasn't quite ready for that. This role was really appealing to me, but after a few months, it became quite clear that this was too much of a departure from Treasury for me. And those initial years, forefront or the start of my career, I was pretty clear that I wanted to continue down that path. I'd just done my Treasury qualification. I wanted to get back into corporate Treasury
side.
I started to look at what roles were out there.
And along came EMR. Do you want to explain what was the company then when you joined them 16 years ago?
Yeah, so everything you said on the outset was all true, just a little bit smaller. The business in its form in the 90s and early 2000s was predominantly UK based. I joined just after they'd completed 2 acquisitions in the European business, in the Netherlands and Germany, and they had just started a pretty heavy acquisition campaign in the US. So the business was growing. It appealed to me because of a number of things. They had the breadth, so operational banking was key. Learned a lot of that in my initial role. It's an exporter, so huge FX exposure. Did a lot of that in my current role and felt I had more to learn and more to add there. And it just felt, as a company, it's the way you want to be. You work for a green, sustainable company. From a personal point of view, it was a treasury role in the Northwest, which ticked the boxes.
Which suits you as well. And just touching on that industry, if you like, what are the changes massive shift, the green economy, everything else. And, what are the biggest changes you've witnessed in the industry that you've been there at literally at the, not the coal face, actually the metal face. What have you seen?
So the real change is a real shift. If you look at certainly in the last 5 to 10 years, EV cars, solar paneling, all of those have such significant demand in the base metal space. So that for us is key because there's one of two ways. broadly. You can either make these products, metals, using the raw materials you find in the ground, or you can use scrap metal. Scrap metal clearly has a significantly smaller carbon footprint, and the way the world is going, that's where the preference was.
Yeah.
So there was a real expansion. It expanded beyond just metals. So clearly the name of the company suggests European and metal. We don't just operate in Europe, and we don't just recycle metals. It's a truly circular, sustainable approach to the industry.
And then pushing that down into treasury, exactly as you say, you're not just European cash management. Is you managing liquidity across UK, US, Europe, Asia? What are the biggest challenges you've seen in that? Because obviously, yeah, you've been doing it.
Yeah, so kind of breaking it down into a couple of pillars there. So
yeah,
funding, working capital management is key to the business. We're procuring scrap, processing it, and then typically at the moment exporting it into some of the countries which are demanding that product. So there's clearly a lead time there. Our funding is predominantly linked to the working capital of the business, and it's reactive to the market. So if scrap prices go up, and you look at recent times, there's been multiple events where you see a huge rally in scrap post-COVID. Things started to pick up. The onset of the conflict in Russia and the UK, and you see all these shocks and rallies, and price goes up. More people want to sell their scrap. We've got more cash going out the door, and therefore our funding increases. So it's all about right-sizing the business so that it has enough liquidity to absorb that inventory build-up, but also there's enough dry powder there to absorb any market shocks, so we can continue to take advantage while maybe some of our competitors don't. Because the fact of the matter is, scrap, you don't make scrap arises from the economy. So there's so many variables which dictate that. At the moment, global output isn't as strong as it has been, so there's less scrap arising in the market.
Yeah.
So from a liquidity standpoint, Treasury needs to arm the business with the funds so it can operate in a pretty tight market.
Yeah, and we touched on
the risk management. Sorry, Mike, go ahead.
Go on. Well, that's exactly what I was going to say. I mean, you got risk management. You got to then negotiate in. We're not, what's the word? We said before, we're not going to go into any confidential information. But when you're negotiating with that sort of in the back of your mind as the treasurer, because it's a more business focused role, isn't it? It's not just, sometimes treasury can be off on the side. You're really at the heart of it. So
that's very true. I mean, finance as a function is sometimes siloed, right? It's they're the guys in the building across the road who, and treasury is part of the group finance function, but it is more than that. It's the interaction with your internal stakeholders just as strong as your external stakeholders. So you really have to understand the business model. You really understand the challenges, because then you're going to the lenders, external, conveying what the business is all about, but making sure that you structure your facilities in such a way that the business can operate day to day without any cumbersome restrictions.
Yeah. And then you were just moving on to risk management. It's great. See, I've got some notes. I'm actually doing my research sometimes. It's got pretty good. Some of the biggest risks that you've had to get through, you touched on some of the geopolitical events and things like that. Any other times, or how has your, you've been there 16 years. How has your approach to risk evolved, sort of thing? If you look back now to when you were first there and think, okay, and now, has it changed? Has it evolved? What is it like now?
Yeah, I think if you look at the wider concept of risk management and its applicability to the business, the two main ones are going to be foreign exchange risk. As I said, as an exporter, we're selling predominantly into a dollar market, and this is driving margin. We're procuring material, selling it into an overseas market. So our sales guys are negotiating pricing based on where they know the exchange rate is.
Yeah.
So for Treasury, we need to mitigate that and react to it. And guess what I would say, what's changed is we've probably gone more to a reactive approach to being much more proactive. So by that, I mean, a request comes in, we'll hedge it, we'll book it. Sales guys have their contract, sales guys have their exchange rate, and the finance guys can book that when we do the P&L and the balance sheet. Whereas now it's looking at the overall positioning of business. Are we underhedged? Are we overhedged? What's our value at risk? are we exposed? So say at the moment, the market would seem to suggest some of Donald Trump's actions have backfired a little bit. So sterling dollar has rallied. As a dollar seller, that means our mark-to-market position starts to increase. So it's all these things which, are not directly linked to the commercial side of hedging, but as an overall risk management for Treasury that I think are so key.
Yeah.
It's the same on the commodity side of things as well. That's another key exposure to us. And what you find last year was a real rally on copper. And that wasn't because the market was thinking, or the fundamentals are thinking, great, copper's going to explode, because China's output was still pretty stagnant. This was pure speculation, right? This was people flowing funds into the copper market because the interest rate environment was showing a bit of decline. And that was rallying copper to very unsustainable levels. So again, being proactive, you're making sure that your limits are right. You're making sure that your overall exposure isn't inadvertently putting the company at risk, so that, commercially we're still hedging our stock. We also need to make sure that the whole taxonomy of risk management is covered.
It's that very outward thing, isn't it? It's like geopolitical, and say that as a catchphrase, but actually you're exactly there. You're right. Dealing with it as a treasurer.
Yeah, and that's one of the things I love, Mike. It's you're selling your desk, you're selling the office, but when you get out to see the yards, when you get out and speak to the commercial guys, you understand what they're looking at and the challenge that they're facing. You kind of scratch your head there.
Yeah.
Where can I add a bit of value here? Where can I give a bit of insight? I don't profess to be a crystal ball gazer. We're entering into FX contracts to mitigate our risk, not speculate, but trying to arm proactively individuals with information so they know what could or couldn't change rates in the short term on a fundamental.
I'll put a link to it actually in the show notes. I'm really good mates with Anthony, the treasurer over at Asahi, and literally, like you can go into one of the yards and actually touch this and then explain to the guys, this is how much this costs, this is how we do it. Similarly, with the site, and we're talking about the bottle price and all the commodity. It's just fascinating, really, about how Treasury really is linked to the business properly. Sort of thing.
Yeah, absolutely. And so it's always refreshing whenever we get new members of the team. Part of the induction is go and spend a day in the scrapyard, go and spend an afternoon with the commercial guys, just so they really feel it. So before you even start logging onto banking platforms, getting your royalties log on, actually go and spend some time understanding the business and what we're about.
Is great idea. And then I know that when we did our pre-chat and stuff a few weeks ago, we talked about you heading to the US. So you spent 2 years in the US on secondment. What was that about? Explain that experience, because I know that both you and I share a love of the US and everything else. Well, shout out to all our US listeners, but talk us through that.
Yeah, absolutely. And kind of, this is lending to, I've been with EMR for 16 years, and it's because I've been challenged throughout, but also been given opportunities like this to continue to develop and add value. So it was, end of 2000. And so you're 5 or so years down the line from when the last acquisition in the US had been made. The integration of those businesses was working well, and certainly at maturity level. The group had been funded by a standalone group financing, so all through the UK with intercompany flow of funds, which is the right thing to do when you're building up a portfolio of businesses. But we were keen, as the business is run by local management, it should also have its own independent and local management from a treasury funding perspective. And it was almost that first step into being more diversified in our approach to funding, given that we had now 3 main geographical hubs of the business. So the CFO at the time, just having a random catch up, he's kind of quite good culturally for the organization. You can just drop by the CFO's desk, have a chat, chew the fat. And then he threw the idea at me. We think you should go out to the US. I was like, okay. So we had a chat, and then before I know it, I was on the plane over to Philadelphia on a bit of a scouting mission to find somewhere to live, meet the team over there, get my visa application in. So from having the conversation, probably November, December previous year, first week of April, I think it was, I'd moved stateside.
Yeah.
Based in our corporate office in Camden, New Jersey, over the road from Philadelphia. I lived in Philadelphia, great city, really enjoyed it. And the remit was, headline quite simple, build up the local treasury knowledge and and exposure for the group with the local banks. So you do a bit of a roadshow. We already had a US bank in our group facility, so that was the stepping stone, if you will. It was okay. The relationship, we want you to be more focused on the US business, and then you start to build around that with other banks in the areas that we operated in. Alongside that was building up more of our operational treasury function in the spirit of the group treasury policy, localized cash management, pooling. So it was there to support
the business. Right.
Yeah, it was a fantastic experience.
And just going into that, so we do a lot, so US clients come to us and say, look, we need to set up in the UK, Europe. What do we do? We need a treasurer. Can you help us? This is all we do, all day long. Yes, we can. You've done the other way. And I love going there, as I said, off to New York in a couple of weeks. Love talking treasury. Obviously, a lot of US treasury can sometimes, given the size of the economy, given the size of the country, can focus a little bit more cash management wise and things. How would you say that you've seen a difference, or what are the differences? What are the commonalities? You've got it firsthand.
Yeah, I think one thing, the US banking market is so fragmented, right?
Yeah.
You've got your key nationwide players, or global players, BOA, Chase, but then you've got a lot of regional players. Yeah. So you go to Minnesota, where we have one of our operations, and you've got these small, branches, almost community style branches, right? So if you look at what we did in the UK, where our clearing bank was with high street banks, in the interest of ancillary, you can spread it around. It's just a lot more difficult in that market, because some banks are at the forefront of technology. Some, if you tell them that you want to connect to a TMS via Swift, they look at you like you've got two heads.
What's Swift?
Like, it just isn't. It isn't in their service package, because their service model is about providing the service to the local customers that they have done for years. And our business is so physical in that we do need that physical local banking presence. So the US, for example, you can still pay cash in some state for scrap. In some states, we give them a check, they drive down the road and go to the local bank and cash that check. So we were never going to move away from trying to consolidate and standardize our banking relationships to two or three, certainly on the operational banking side.
And then, as you say, you were there for the 2 years, so getting that financing in place. Any lessons you learned from that? Sort of, again, without getting too confidential, but things that takeaways from that, you were sort of, right, it's got to be standalone, stand up by itself. Any bits you took away from it?
I think the business, it was the first asset-based lending facility that we put in place, which is getting better in the UK and Europe now. But at the time, that was like bread and butter in the US. The league tables, you had so much information out there that you could compare and contrast. What's the market doing? What tenor sizes are? Who's involved in those banks? And those are the banks that you go out to. But as I mentioned earlier, your relationships as well. I made it almost a priority in those first few weeks and months to get out and meet with banks. Some never came to anything. Some you have good relationships with, they go on the back burner, but then come back. And you build up to, okay, let's get everybody in a room. Let's have the presentation here. Let's talk through what the business is about. Let's talk for what the terms you are. Okay, you're going to lose a few. Some might not ask the questions in that, and then you have to have supplementary meetings to follow. We whittled it down to a banking group that knew the business well and was supportive of what we were trying to do. And then you move into credit. But again, it's the relationships to me which were the most important thing in that. To have somebody, a strong bank in your corner, definitely helps when it comes to that syndication and book running.
And I know you've got relationships as one of the key pillars for yourself, sort of thing, but you've gone everywhere from graduate trainee now to group treasurer, a major multinational. We're an advice show. Someone's listening now. They might be a treasury analyst on the west coast of the US. They might be a treasurer in the UK. It doesn't matter. What are the career decisions, though, if you look back across them, that you think, that was a good idea? You headed to the US, you did that placement, you did, if you reflect, what advice, we're not at the end of the show yet, but it's more just the waypoints along the way. What are the things that you think that people should be thinking about?
Yeah, I think it's embrace those opportunities, Mike, because it doesn't define you. It doesn't define your future if you make a decision. If you show eager and willingness, like my example of going into practice, I tried it. I realized, no, this isn't for me. I put everything into it. I worked hard. I delivered. But I realized in my heart of hearts that it was Treasury. When it came to the end of my secondment in the US, the decision was then, okay, what do I do? Do I stay in the US and just be the treasurer for the US business?
Yeah.
From a personal perspective, yeah, get the green card, live in the US. That was an adventure. But it was no, I feel I've got more to give in a multinational space. So it was going back to EMR and understanding head office and understanding what else is on the pipeline and the future projects and making sure that was a fit with my future. And at the end of the day, you do have to just take a punt. If it doesn't work, it doesn't work. But you fail forward, right? You pick yourself up and say, well, I tried it. It didn't work. What's next?
And again, you talk about the future. What do you see as the biggest challenges, trends? I was on the podcast yesterday. We were talking, yeah, you can talk AI, but it's actually machine learning. That's something that a lot of treasurers are doing. It's perhaps an overused bit, but what are the things? What other areas are you thinking, or what are the other trends that you think other treasury professionals think about or should be thinking about?
Yeah, I mean, obviously AI is up there, isn't it?
Yep.
It's the hot topic. That's something which has its pluses and its minuses. I think in terms of the other trends, risk and volatility is so central to our thinking and my thinking within the current role. How many black swan events as we had in the last couple of decades, right?
Yeah.
Certainly in my career, you can think of 3 or 4 major ones. So it's being ready for that, on my point earlier about being proactive. You almost have to look forward and stress test and think, where could this go? We're not crystal ball gazing. All you're doing is anticipating, calculating what the thresholds are for the future. I think compliance is another big one for coming on board, what that means in terms of capital allocation. And also linked to that, it's the ESG point as well. I think we're quite fortunate in that, we're inherently green. Our name, you only have to read our front page on the website to know what we do and ticks a lot of the boxes. Whereas you can see that ESG requirement being just as important, if not already, as the credit consideration when it comes to sanctioning deals. And it'd be interesting to see how that works. We get asked a lot about putting in sustainability metrics in our banking facilities. It's not something we've done at the moment. It's probably coming, but again, we know what we're doing is it ticks the boxes.
Yeah.
And it remains to be seen how much of an influence that becomes in the future. And then, risk management, AML, anti-money laundering, KYC, that continues to evolve in its complexity. When I first started, all you had to do was give notification of anyone who owns more than 25%. And it's getting to the point now where you need to know the inside leg measurement of any shareholder who owns more than 1%. It's going that way, which I get it. It's important.
Yeah.
Banks are getting fined left, right, and centre for this, but it is a challenge for a treasurer if you get credit approved and then you've got to wait 4 weeks to get KYC cleared. It's another bottleneck in an already tight process.
And it's on top of your day job as well. I mean, when you signed up back in the day, that's not what it said. Like, in 20 years' time, this is what you're going to be doing. You're like, really?
No, absolutely. Yeah.
And skills. And so, I know you've done education, you touched there on, and treasury qualifications. If you're talking to treasury professionals now, you're sitting there having a coffee with a treasury analyst manager, and they're saying, right, what should I do? What should I do? Declan, tell me, what is it? Yeah, go study, or is it what other skills they need to develop if you reflect back over your time?
Yeah, I mean, I'm a big advocate of I like learning, so I really enjoy doing the qualifications there. But I think the content they provide is really good as well. So yes, if it works for you, the studying is, I would say it's more the active involvement, get out there, go to the events. I know if you're funding it yourself, they can be quite pricey, but a lot of the time, if you're in a corporate space, you get discounted tickets or access to the materials anyway. So it's get out there, go to the events, be curious. Sometimes you come away from these events and you might come away with 4 or 5 bullet points of things to go on. You could also come away with 4 or 5 contacts or networks. It's relationships. I've said it a few times, but when I think about all the recent financings we've done or all the placements we've made in recruitment, it's all about relationships of who knows who. And you never know what the conversation you have at an event, or even reaching out to someone on LinkedIn.
Yeah.
And it's just
Yeah.
about staying curious and open-minded. It's ever-changing. Treasury, by nature and its day-to-day, is a very dynamic, ever-changing role. So therefore, the mindset you need to have to be able to thrive in that area is the same. Always look at, what are you doing now? How could it improve? And what areas does the future hold?
I think, just reflecting on treasurers on the whole, I think the more successful ones are the ones that work on that relationship building. And I was just doing our slides for one of our presentations, and I've freshened them up. And one of the key things, I was reflecting on some of the podcasts when I've talked to treasurers like yourself, and it's, you could go to, come to one of our events, great, but then you just sit there like, one of those birds in, that, you're there, feed me, great, give me
Yeah.
education, great, and then I walk out. That's not where the value is. The magic happens after you listen to 3 great treasurers, then go and meet 10 other great treasurers, and great, lovely having a beer with them, connect with them, make them part of your network.
Yeah.
That's what invest in your own network, sort of thing. And you've done that very effectively, haven't you?
Yeah, I completely agree, Mike, and it's a lot easier to do now. It's a lot easier to do now. Back in the day, it was, you'd meet them, you'd have your Outlook with the contacts in, and you'd check in every so often. And I remember doing it when I was leaving the NFL. You kind of ring round your relationship banks, you ring round some of your peers who had moved on, and you speak to them. Whereas now, it's as simple as LinkedIn. LinkedIn's a great tool.
You fancy a coffee?
And the events. Yeah, exactly.
A question before we get to your LinkedIn thing: are there any challenges, treasury challenges, innovations you're thinking? We touched on some of the KYC stuff. That's what you got to do. But some of the stuff that you're actually excited about tackling for the future. What about other things that you're thinking about?
Yeah, I like to think we certainly try to be progressive in our approach to things. So yeah, you could sit there with your whiteboard and say, right, transformational, how are we going to make this fantastic? But I like the idea and the culture I try and build in the team is, going after those low-hanging fruits, those incremental, marginal improvements. Something as simple as, why is the cash sat in that bank account when we could be earning 2-3% or paying down our debt? And in the past, it would be maybe, oh, well, I'll have to ring the bank and move it. It's like, well, no, technology is an enabler for all this stuff where you can flag stuff, you can automate transfers, do everything to make things more efficient, to make those marginal gains and self-manage. So get your KPIs, see how you've improved in these areas. I think one specific area of development we're looking at, which is probably more transformational, is just trying to streamline and be more efficient in the execution of our risk management. So
excellent.
I mentioned earlier, it's linked so heavily to the commercial side of things. So our challenge is now, how do we shorten that time from when an exposure creates itself to when we physically lock it in? Because you've got multiple people involved in it and multiple different systems. If we have it STP'd, then arguably you're locking in that rate. Now, yeah, okay, some might say, well, for every one you gain out, you'll lose on, so it evens itself out. But no, the whole point of hedging is to create certainty, and the sooner you can create certainty, the better. And that's one area that we're spending a lot of time. We've had some really exciting conversations. There's a few different things feeding into that, APIs, AI, machine learning, automation. So a lot of exciting areas to explore in the coming months for that project.
Great. Well, time wise, we're running to time now. So I was going to say, so we're going to put your LinkedIn details in the show notes. And we've done this before. I think I said to you, there was someone we spoke to back last year. Oh, you should change that last bit. I went, why? Everyone absolutely loves it. It's like the sort of the key takeaways where someone's listening now, they're having their coffee and they're going, right, actually. And so if you are listening, take your notebook, put this in your Outlook, whatever. What are the takeaways or advice you give to people listening today, whatever level of treasury? So juniors through mid and senior levels, what would you say?
I think it's, fundamentally, you think to yourself, where it's cliche, right? But where do you want to be in X years? And then you reverse engineer back from there, because it can be pie in the sky in terms of 5-10 years, but you've got to have something. And then that translates into your day to day. And even if it's in your current role, you can still apply the same concept. Just like, how can I make today slightly better than yesterday? It doesn't have to be a practical thing that I've just mentioned about. It could be your personal development. Who can I go and speak to? What can I read? it's just that curiosity in an ever-changing world already. It's, if you've got your finger on the pulse and you're always thinking, it's great. And I think Treasury does give that great opportunity to be at the forefront of some of these decisions. If you're looking for your role, or you're looking for your next step in your career, again, reach out to people. Anybody wanted to speak to me, I'm not saying I'm actively recruiting at the moment, but I'd be more than happy to speak to people about any of the decisions I made or any steps I've taken in my career.
It's about having that network, exactly as you say. And, we did it in one of our newsletters where I said this junior guy in the US actually said, and we were talking to this boss of him, he was on the podcast, and he just said, this junior guy said, how do I learn about the business? He said, go have a coffee with people, have one. Yeah. And then he was about a month in and he said, oh, how many coffees? He said, oh, I'm not learning enough. He said, well, how many coffees you had? He went, well, I've had a couple. He's like, no, have a coffee every single week. And rapidly became one of the most networked people there because, as you say, it's all relationships.
No, that's true. And I need to be better at that. I think speaking about it is a reminder that I probably need to do more of that. At the end of the day, we're all people first, right? We're all people first. So people inherently just like having coffee and catching up and chewing the fat, and who knows where it will lead to. Absolutely. It's great advice, Mike.
Well, don't worry. Your LinkedIn is going to explode after this. You'll be like, oh God, how many people? Right. So, they're doing it. Thank you very much, Declan. Great career track record. Thank you very much, sir. Been absolute superstar. Thank you.
My pleasure, Mike. Really enjoyed it. Thank you so much.
Thank you. I hope you enjoyed listening to this week's podcast just as much as I did recording it with another amazing guest. Now, don't forget to subscribe on your usual platform, whether that's Spotify, Apple Podcasts, wherever you listen, so you never miss a future episode. Whilst you're there, if you're listening on Apple Podcasts, maybe give us a 5-star review. Why? Because it helps other Treasury professionals find the show, join the conversation, and get even more value. Now, also, we're helping you guys in Treasury. If you are thinking about studying for your CTP or FP&A qualification, then listen up. We partnered with the AFP to offer a discount on study, both for the studying and for the preparation platform as well. So you can get through us $150 discount. Yes, $150 for each. My goodness. Yeah, we're here to help. So it's a great step for your career and always good to save where you can. So all you need to do is go to treasuryrecruitment.com/partners. You've got the codes there. Then you head across to their website and you get the discount. You also, as well, if it wasn't enough, we're going to be heading to AFP Boston later on in the fall, as the Americans call it, in October. And we also offer a $150 discount off your registration. So wherever you might be, it's a great conference. Whether you're in UK and Europe, you should go. I'm going. It's going to be amazing. So incredible few days, great insights, proper networking, great conversations with lots and lots of treasurers. Last time in Nashville, 8,000 plus, one of their biggest ones ever. It was amazing. So just go to the show notes and you'll find the link, or treasuryrecruitment.com/partners and get it all from there. Remember, if you're looking for a role, visit treasuryrecruitment.com. If you need some advice, reach out, mike@treasuryrecruitment.com, or come and meet us in person. We've got our sessions coming up. We've got sessions throughout this year in Texas. Then we've got London. Then we've got Dublin. Then we're back to the US for Chicago. Then New York. Crumbs everywhere. Eurofinance, the lot. And then AFP. And then back to London. And then we're doing Netherlands as well. So it'll be great to see you. We're going to be everywhere. So looking forward to it. Thanks very much. And until next week, enjoy the show.